Eleanor here, just to give you a kind of follow through update on our ADA Cardano trade. So it was probably Thursday last week, so 4 or 5 days ago, I think 10th, around about the 10th of January. We first started talking about this descending wedge which has been forming up over, well, really since kind of the end of December time. This is a smaller pattern actually of a much bigger pattern, but and we suggested that it was come down inside this triangle. It was bouncing around on the 20-day EMA, and that we thought it was going to break out. It did. We had a small rejection. In fact, let me zoom this in because I'm aware that we're on probably mobile devices. So so we came up, we were bouncing around this area on the 20-day EMA, and we said that because we were kind of leaning in this direction towards the upside of this triangle, we were likely to break out. We said we'd probably go up to this 0.256 level on the Fibonacci and see a rejection, which we did, and then we said we'd probably just bounce around. Bounce around in this EMA until we had a cross, and then we expected to head up towards. Let's get rid of that. Towards our target at the top of the wedge around the 150 mark, which, as you can see, is pretty much exactly what we've done. It's taken it's taken 7 days to do it almost, and I think we discussed originally that we ought to take some profits along the way if we bought in kind of around this level, and we're looking at the technical analysis, and if we're prudent tradespeople, prudent traders, then what we would do is we would sell a small amount, and we'd set a sell order to do it, so it would be done automatically. So we'd identify the levels at 121, then at 128, 134, and then kind of 139 and 150-ish at the top of the level, and those are the areas really that we're looking at taking a small amount of profit. And I guess you could argue that if you've taken profit here and taken profit here, then you've not made as much as just buying it and holding it to go all the way up to the top of the trade. But always remember, none of these patterns are guaranteed. They are their analysis of patterns that have happened for a long time, over 20, 30, 40, 50 years, even some of them, and there is a high probability that they will follow through on what has been their traditional trend throughout that period of time, but it doesn't mean it's always going to happen. So it's prudent to take profit as you go through, and what's also prudent is to separate your kind of, I guess, if you've got your crypto bags, what is prudent is to have your hodl bag and to have your trading bag. Now your trading bag should be around about 10% of your hodl bag. If you can read hodl from that, and that way you've benefited from the overall price uptrend by having your holding bag, and you've also made a little bit of short-term additional income, or you've accumulated more Cardano by just risking your 10% of your hodl and taking small profits along the way up throughout the trade that you've analysed, that you've created a strategy for, and that is playing out the way that you've expected it, and that you're watching at each level, at this level, and at this level, and at this level, every level. You're keeping an eye on it right the way through to decide, is it going to reject, or is it going to follow through and move up to the next stage? That's really what kind of day trading is. It's identify a trend, identify the targets, identify the route to that target, i.e. the fib levels or whatever levels you've determined, and take one target at a time, and you should do quite well. But as you can see, this one's played out exactly as we expected it to.